Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very good day of trading today. And in today's markets, guys, well, it was definitely an extremely wild session. What started off the morning after CPI as a very, very red day culminated in a absolutely euphoric rally into the close. Take a look at the intraday swings, guys. These are the largest intraday swings that we've had essentially all year, both on the SPY and on the QQQs. On the SPY, take a look at this. We started off the morning extremely red after the CPI event. The CPI was actually coming in better than expected, but what that caused, guys, is the fact that next week for the rate cuts, now we may only be expecting a 0.25% cut instead of the possible 0.5% expected cut. So the market's having a little bit of an interest rate temper tantrum in the early part of the morning, and then it all turned around right around 10:45 in the morning. Take a look at this massive swing, guys. From bottom to top, largest percentage swing, guys, in the entire year so far. Almost 3% bottom to top on the SPY. And take a look at this move on the QQQs, guys. A 4% swing from bottom to top on the QQQs intraday. So it was a very interesting and volatile day, to say the least. So in today's video, guys, we're going to take a look at a few things together. Number one, we're going to go over that CPI report and get a gauge of whether or not inflation is truly over and done with, or if there's still some remaining sticky problems with it. Number two, we're going to go through our major technical analysis rundown in terms of our major stock market indexes, see how the rotation is shaping up, and lastly, take a look at our big tech names and see whether or not there's still some good deals to be had in some of our favorite names. And lastly, guys, take a brief look into my portfolio for a few of the trades made today and what trades that I have remaining for the remainder of the week as well. So a lot to cover in today's video, guys. Let's jump right into the action. So SPY ending up a very healthy 1.03%. Now, mind you, guys, both of these indexes, SPY and QQQ, were down almost 1.5% on the morning session. So heck of an intraday swing, to say the least. QQQ ending the day up 2.17%. Beautiful day for them. However, the rest of the market was not cooperating so much. Let me see if I can find the heat map that I pulled up this morning, and you guys will see what a stark contrast it was, right? So let me just bring it over here. Here was the heat map this morning at roughly 10:30. As you can see, not the same thing by the end of the day, right? Crazy swings in the market, led to the upside, of course, by our big tech names, NVIDIA and Broadcom, really carrying the semiconductor industry on their shoulders as a whole. But the rest of the market not having that good of a day, guys. Coming back though, but still not the best day, right? A lot of the sectors that were down today were some of your interest rate sensitive sectors. A lot of them have been rallying under the premise that rate cuts would be faster and larger than anticipated, right? So after today's CPI report that came in fairly good, that kind of tapered back the pace of the rate cuts. Well, obviously these sensitive sectors get hit a bit the most, right? So consumer defensives down, energy down, healthcare as well, financials as well, and more of your defensive names such as industrials were down as well. The story for the day was really big tech, guys, responding extremely, extremely well to today's price action. Take a look on the one-day relative performance, guys, and you'll see this was the snapshot at about 10:30 this morning. Let's do a little quick refresh, and you can see big change, right? So technology, consumer cyclical, communication services, basic materials, utilities, and industrials all in the green, and some slightly trailing industries, which are your more rate sensitive ones, the ones that have been performing well over the last 2, 3, 4 weeks, the more defensive ones, right? Consumer defensives, financials, energy, real estate, and healthcare to the downside. Leaves us on a 1 week relative basis, guys. Very mixed market, to say the least. Technology, consumer cyclical, real estate, and utilities outperforming, but the bottom half of the market, guys, kind of trailing back a little bit at this current point. So before we get into more technicals, guys, let's go over that CPI report and see what the big fuss was about this morning. So let's have a look. In terms of what happened on CPI this morning, well, the expectation was for 2.6% inflation read year over year. It actually came in under the expectation at about 2.5. Very, very good. Now, there was a very tiny increase in core month over month from 0.2 to 0.3. That was above the estimate, and most of that was having to do with shelter. But overall, guys, a very beautiful CPI read, if I do say so myself. Take a look, guys. Here's your CPI chart for the time being. And as you can see, inflation is pretty much done with, guys. I do not see a resurgence of inflation anytime soon in the either short or medium term timeframes, guys. Earnings have been saying that as well. And as we can see, guys, the prices of goods have just been getting crushed as consumers just pull back on their spending. Very, very tough to get a second wave of inflation when everybody is not spending money. Either corporations are pulling back on spending, and even consumers are pulling back on spending alike. So the reason that we're still slightly elevated on core, guys, is because of shelter. So take a look here, beautiful inflation graph to the downside. Take a look though, guys, the shelter index has risen 5.2% since August 2023, accounting for more than 70% of the annual increase in the core CPI. Now, I agree with you. This is very important that shelter remains sticky because for every individual, guys, every single person spends roughly 40% of their entire income on shelter costs, either through a mortgage or through rent. So it's absolutely normal that we're still feeling the pinch and tightness in the economy because rent prices and mortgage costs are still relatively high. But for the rest of everything else has been coming steadily down. Take a look at this as well, guys. Let's go through this chart actually first. So take a look at this. This is your overall CPI inflation read down now to 2.5% measured in August. And you can see if we pull up the respective sectors, right? Take a look at shelter. Shelter is really the one that's been excessively sticky. It has been coming down, but still sticky at an annualized basis of about 5.2%. Now, if we were to look at goods versus services, shelter is obviously part of the services component, right? Take a look at goods. Right? Goods now in deflationary territory. I know the user interface right here is kind of broken, but you can see it kind of right where my thumb is right down there. 1.9% in black between the August calendar dates. 1.9% down, meaning we're having goods net deflation. This has not been the case, guys, since prior to the pandemic. So the inflation is definitely not in the goods sector. So where is it? It is still in services, right? So services still elevated 4.9%. And I'll remind you, right, about 50% of this entire services read is housing and shelter. So that is the major sticky component, but we've said on the channel for many, many times now that shelter is one of the most lagging indicators of all. It takes them a long time to readjust to current levels of market pricing, right? It's not as if landlords can just flip a switch and decrease people's rents every single month as you can do with the price of other commodities, right? These leases and mortgages are usually signed on a year-to-year basis. So it's going to take some time for those to kind of alleviate further down. So hopefully that makes sense for everybody. Now, I always bring this chart up as well, where inflation is and isn't, right? So here you have a basket of roughly 20 different goods and services. So let's just take a look, right? With our overall inflation read at 2.5%, what is still sticky? Well, auto insurance right here is a little bit of an outlier. We've talked about that many times on the channel. It is now down from a peak of 20%, coming down ever so slightly. But here are your other major components: rent and housing. Restaurant meals also still slightly elevated. Here is a very bullish point though. Earnings, these are household earnings, our incomes, our salaries. As long as this number is outpacing the growth rate of inflation, we are gaining purchasing power. I know it doesn't seem like it because these effects are very, very slow, but just understand this is a net positive for individual wages right now. Education coming more down to our overall levels right there. Medical care, personal care coming down as well. Household energy now almost in line. And here is your basket of goods, guys, that are now below the overall rate of inflation. And you can see there's a lot of very fundamental elements that we use on an everyday basis. Prescription drugs, alcohol is down, hotel rooms, recreation, college tuition, a big one, right? Down significantly to only 1.4% gains year over year. Groceries, another very big one too. Only 0.9% year over year. Pet and pet products, clothing, another big one, right? School books and school supplies now in deflation. Transportation in deflation. New vehicles now in a deflationary environment. Electronics, airfare, toys, appliances, furniture, rental cars, gasoline, another big one for everyday use, right? Down significantly year over year, now in deflationary territory, and used vehicles as well. So as we can see, guys, many of our fundamental everyday items are now far below the overall rate of inflation. So it just goes to show, guys, that a lot of goods and services are now coming significantly down from their peaks of the last 2 years. All in all, it was a very decent report. So why did the market have a little bit of a temper tantrum in the morning here? As you can see, right? Big flush on the Qs and on the SPY. Every single element of the market this morning, guys, was bright, bright, bright red. Why did that happen? Well, it has to do with the rate expectations. Take a look at this, guys. The rate cuts are scheduled for next Wednesday with the Federal Reserve. So coming up very soon, right? Here is what happened today. So as we can see, the expectation for this right here is only a 0.25% cut. This would be a 0.5% cut, right? A bigger cut. So before today, we were expecting between 34 and 44% probabilities for a 50 basis point cut. Now that has been really slashed almost more than by half. Now the probabilities only stand at about a 15% odds. Now the odds have now spiked back up to only a 0.25% cut. So essentially what the market was saying this morning, guys, is that everybody was kind of leaning towards the heavier 0.5% cut because we know the economy has been slowing down. The jobs market has been showing signs of weakness. So people wanted the Fed to be ahead of the curve and start off things with a very large interest rate cut to let us know that they're understanding of the, of the economic slowdown that we're facing right now. And when we didn't get it with that CPI report this morning that showed that inflation was coming steadily down, right? It doesn't put that much pressure on the Fed to do that 50 basis point cut. So that is what happened this morning, guys. The market just having an interest rate tantrum and repricing to the downside those expectations for next week's rate cuts. So hopefully that makes sense as to the explanation as to why we had such a violent swing over the course of the morning, right? You would have expected out of the gate for the market to actually start rallying right away, but they had a little bit of a tantrum first and then proceeded to rally. But overall, guys, today, the data was quite good. As we saw, no major red flags in inflation to speak of as a whole. So now, guys, let us jump right into our technical analysis now that that's out of the way. So we can see here, guys, with this tremendous recovery by the S&P and the QQQs, the bulls are now set up very nicely. We were in a daily downtrend, and I was telling you guys yesterday to watch if the bounce were to continue, watch if we take out this 553, 554 level. And we actually closed right into it today. We're now dealing with this tiny little level of overhead resistance, which stops at about 555. So one last push by the bulls is going to completely engulf this move and set themselves up for a possible daily uptrend reversal into our rate cut cycle next week. It's very possible that rate cuts are going to be a sell the news event here, guys, but we could just continue this rally into the rate cuts. In terms of how we're sitting on the weekly timeframes, well, we're trying to set up for the weekly trend change. As we can see now with this daily engulfing move, if we get the daily trend back, that means that your weekly higher lows are set and we are possibly going for leg number 2, attacking our all-time highs. Yes, attacking the all-time highs even amidst of all this market uncertainty. Now, I am not convinced, guys, that throughout the month of September and October, with a lot of uncertainty, poor macroeconomic data, I'm not convinced that we're just going to blast off through the all-time highs. That is the unlikely scenario in my opinion. However, as we do on the channel, guys, we will take this one day at a time and respond as the market gives us more data. Moving into the QQQs right now, QQQs up 2.17%, of course, and same thing for the Qs. We noticed we were in a big daily downtrend for the Qs, and now look, over 100% engulfing move of our most recent downswing. It sets up the bulls very nicely to be able to reset into a new daily uptrend. Give me a little bit more bounce, guys, and we can really clear above this area of, well, it used to be resistance before today. So if we can clear it, this now becomes support and we can set up for a possible daily trend change and possible expansion of this weekly leg higher. Keep in mind, if we do crack above 485, that would be a new weekly uptrend set forth by the QQQs, and the SPY, you would need an all-time high for that same move, right? So the QQQs have a decent chance of doing that, but we need some bounce follow through after today. But looking fairly good here, guys. But as I've been saying, right, I'm taking this with a little bit of a grain of salt. The bounce so far has been nice, but we would be lying to ourselves if we were to say that there is nothing wrong in the economy right now, right? This is entirely a data-driven market, which is why your data days have the most volatile swings. And we all know the month of September usually starts getting quite ugly towards the tail end of the month. And we're kind of coming into that area right about next week is going to be the midpoint of trading for the month. So there could be some severe and steep declines in the event next week we get some unfavorable data, or in the event Jerome Powell is not too kind for us when they do release the pace of interest rates. rates, all right? Or interest rate cuts rather, right? So we'll take this one day at a time here, guys, and identify good swing opportunities for individual companies, but we are not in the business of predicting where these markets are going to go in the next 1 to 2 weeks, right? The best we can do is respond to the price action and take our trades accordingly, which is why I've been favoring a lot of short put options and selling premium in this market in light of the heightened volatility. Now, moving into financials, financials doing a great job of recovering here today, guys. It was looking very dire for financials early on in the morning. We were about to smash through this big area of support that we labeled on the chart, which ended pretty much at the 43.40. As we can see, though, the bulls put in a heck of a move on the day, totally engulfing the hourly time frame right there. So if we can get that back, hourly uptrend shift into tomorrow, we'll be looking at possibly the ability for the bulls to reset this. If they can recapture a lot more of this daily move, we can possibly set up for a daily trend change attempt and put an end to this weekly consolidation. I'll remind you, we've always just been looking for a weekly higher low for possible trend continuation. And we were targeting this area, guys, confluence with the support zone and the 12 EMA, this yellow line right here. Confluence was beautifully touched today and now rejecting to the upside. So looking like the bulls do want to go for some trend continuation to the upside. Not looking too bad on financials at all. Now, moving into healthcare. Healthcare as well was now looking the best over the course of the morning today. They did set a daily downtrend in motion before completely engulfing most of the drop. So in the event tomorrow we continue with an hourly uptrend, well, that means, guys, that your daily higher lows are set. And in the event we were to break yesterday's highs, that would be a new an attempt for a daily uptrend for the bulls, right? So not looking too bad at all, reacting fairly well from some of our moving averages and some of our support levels in the last few days of trading. But the essence of this move is best viewed on the weekly, guys. We were always looking for a possible weekly higher low for possible further trend continuation. So in the event that the bulls are able to break yesterday's high tomorrow, we can be confident in saying the weekly higher lows are most likely set, and we're probably going for a second attempt at the all-time highs here. So healthcare, not looking bad at all, and I did open a brand new position on one healthcare name that we'll take a look at the end of the video. Now, moving on further, let's take a look at semiconductors. Semiconductors, guys, complete outperformance by this index today, 5.16% to the upside. And as we've said, most of that was done by NVIDIA and Broadcom AVGO. But even AMD having a very respectable day nonetheless, them too. So SMH, we were always looking for the possibility of getting the daily downtrend back and possibly resetting into a new daily uptrend. Now, the bulls have completed step one of that, right? So as you can see, 1, 2, 3 legs down. We have now engulfed the third leg of trading. So at this point in time, guys, as soon as this move is topped out, we're going to be looking for the bulls to set up for a daily higher low for a possible daily uptrend shift back to them. Now, we have a little bit more of resistance areas to clear, guys. A couple moving averages above us and the remainder of this resistance zone. 238 is the top end of this. If we can clear 238, it's probably going to be smooth sailing all the way up to about 248. And then we have a lot of room here, guys, to reset into a possible daily uptrend. Not looking too bad at all. In terms of our weekly, guys, well, we know that we were possibly looking for a weekly higher low to be set, and now it is up to the bulls to prove it to us. Can they get the weekly uptrend back? That would be a break of 253. Still a lot of work to do for the bulls. Now, what can also happen, guys, is in the event that they cannot get it done and we continue kind of just tightening up in between the overhead resistance. And now, if we clear this, what would be below support, right? If we just continue consolidating between these two areas, maybe the best we can get on SMH is perhaps a tightening range in this whole area right here, talking about, roughly 245 down to about 220, right? This very, very tight range right here. So I wouldn't say that the bulls have a complete control right now of the weekly, but it's not looking too bad. As I've said many times on the channel in the past few weeks, the best way that I'm playing semiconductors right now is by playing short puts, by being able to benefit from that volatility, right? So we're writing short puts well below where the current market is, and we are getting rewarded with a lot of premium and a lot of margin of error to do that right now. I'm going to be delving into a little bit of shorter term strategies on this one as well, making probably some intraday moves, probably with some call options and maybe some call debit spreads, but not yet. It's not yet ready in my humble opinion. For now, I'm just staying with short puts on this industry as a whole. Moving into the Russell, you can see, guys, the Russell's still very, very weak. Even though we had a tremendous recovery with the rest of the entire market, the Russell remains weak because, guys, still not truly the environment where growth stocks can just rally and rally and rally, no questions asked. We know the economy is slowing down. We know that there is a lot of criticism right now of growth, not only in small cap growth, but also you've seen it with semiconductors and also big tech too, right? So it stands to argue that the growth trade is not quite ready just yet. That being said, daily downtrend is steadily in motion right now, still just looking for a upswing attempt by the bulls. Now, it does appear that they do want to get that underway. If we continue to bounce in these markets tomorrow, we may just have that daily upswing attempt. But the lower highs, guys, are very, very far away. They're all the way up here at 220.5, right? So unfortunately, the bulls have a lot of work to do in terms of their bounce attempt before we can be, confident that they have an ability to reset into a daily uptrend. As of now, guys, really just extremely large weekly consolidation in these markets, and I do expect that to continue, guys. I would only be interested in playing the Russell in the event we start challenging some of these lower levels down here, 198, 196, then I might be able to write some short puts down here, some put credit spreads as well, but I'm not going to be touching this one. I think that there's more, more confident plays and a lot more secure plays that we can be doing in these markets right now. Not the current environment for growth, but trust me, when I do feel it will be the environment for growth, I will be all over the IWM. So let's just keep ourselves posted on that. Now, lastly, the Dow Jones. Dow Jones not performing too badly today, 0.31% to the upside. And the Dow Jones, I'll remind you the context of what we are looking for in this index. Daily uptrend was underway. And then we had a flush of these lows. We lost the daily uptrend. And now the bulls are trying to get it back. But they set the daily downtrend in motion today. But we do still have a chance here, guys, right? If we can set up for the hourly trend change right there. We can confidently say that if we get that hourly trend change and break yesterday's high, similar to the index we were just seeing, right? Healthcare has this exact same setup, right? Daily downtrend, possibly into a reversal scenario right away. These scenarios, guys, are extremely, extremely rare, right? These bottom to top ridiculous moves are extremely rare in the market, the biggest one we've had all year. So it's normal that the price action looks a little bit wonky at the current time, right? But just understand your levels. If we break above 41,000 by tomorrow, that would be a possibility for the bulls to recapture this and try and set up for the daily uptrend reversal pattern, right? But we need a clear break above that 41K level, really get us out of that daily downtrending territory, create some space, set up for the daily higher lows, and then go for it. The aspect of this trade, guys, is much more clear on the weekly time frame. As you can see, we were always looking for a weekly higher low for possible further trend continuation, and we were targeting in the last couple days of trading. I was telling you guys, watch out for this confluence between the 12 EMA at about 40,300 and this big support line right down here at 40,000. We came right into it, rejected, and now possibly moving into a weekly momentum higher into rate cuts next week. So not looking too bad on these markets overall here, guys, but we have to stay cautious, take this one day at a time, because as I've said, even though these moves look very, very bullish into the rate cuts, well, just remember, seasonality into the end of September is still a thing, and rate cuts themselves could just be a sell the news event for the markets. We've been waiting for them for so long. The markets have been rallying into them for so long. So in the event the rate cut event is, less bullish than anticipated, because we're going to be getting a summary of economic projections, aka the dot plot. If you guys don't know what that means, every single member of the Federal Reserve is going to give their expectations of where they think rate cuts or interest rates should be in the next 3, 6, and 12 months. And in the event that their expectations do not align with market expectations, that is when we might have a problem, and that is what might trigger the sell-off. So a lot of data to be had next week. We'll keep a very close eye on that. Now, moving into our big tech names, shall we? Give a very brief second. All right, just making sure my microphone is back on, guys. My bad. So looking at Apple right now, Apple not looking too bad today, 1.16% to the upside, still reacting beautifully from this area of support, right? 220 down to 214 is going to be quite a solid area. We've been reacting to it a lot ever since the early portion of June. So I'll remind you, Apple still in a daily downtrend, but keep an eye, guys. The bulls have a very nice bounce underway. Need to get a break of 225.39. If you can engulf this move and break it, could just be a recipe to set up for a daily trend change. back to the bulls, and that might symbolize the fact that the weekly higher lows are set and may just be going for a new weekly uptrend on Apple, right? So we've been waiting for these weekly higher lows. How do you know the weekly higher lows are set, guys? Well, then end to the daily downtrend, right? Always in relation to one time frame higher. So we were looking for the daily downtrend. Daily downtrend meant weekly consolidation. And if we lose this daily downtrend and the bulls get the daily uptrend back in motion here, confidently say the weekly higher lows are set and possibly moving on to new weekly momentum higher. So Apple is not looking too bad right now. It's looking pretty good for a swing trade setup here, guys. If that is your thing, the stop losses can be very tight below here at about 216.72. You're risking about $5 to the downside, and the upside targets are really starting at about the 231, 232 range for the weekly trend expansion, right? You're targeting this one right here. So we've got about $5 worth of downside risk for this tiny little swing trade and about $10 worth of upside, a 2-to-1 risk to reward trade. Not too bad if I do say so myself. I'm not going to be playing that one, guys. I'm more keen on waiting in the event Apple, has a more decent sell-off down here and comes all the way back down to 210, 208. I'll be looking for some short puts all the way down here. Myself, I'm just patiently waiting for Apple in the event we get some monthly consolidation down into the 200 level. That's what I want to play on Apple more specifically. The valuation up here is a little bit too high for me, considering the fact that the revenue growth is not that much, right? So I still have a bunch of long-term Apple shares that I'm not selling here, guys, but the swing trades in this location, in terms of the longer form swing trades, for me, in my opinion, there's just better opportunities in the market right now, but Apple's looking good. It's not a, it's not a buy for me right now. It's not a sell for me. I'm just holding the shares that I have. Taking a look at AMD, AMD nicely up about 5% on the day today, and AMD really fulfilling the prophecy that we were talking about yesterday, right? Daily downtrend underway. And now look at this engulfing move, guys. We've engulfed the entire second leg of selling down, right? It was this guy right here sitting about 148.50. We've now engulfed it. So this sets up the bulls beautifully for in the event, guys, that we top off right here tomorrow. We have a lot of space between us and these lows, 132.12, to set up for the daily trend change reversal. Now, in the event we can just completely V-shape this and head into resistance, just keep in mind, guys, this area of resistance, 155, 160, that's where we've gotten rejected a ton of times in the past. Previous resistance here, support here for the markets, congestion here, support all the way back here. So it stands to argue that this is a very, very big level. I would be highly surprised if the bulls start their run all the way from down here, guys, similar to this run right here, right? The problem is when you start a move so low and you come into an area of resistance, right? After running 10, 15%, the bulls get tired in this location right here. And that's when we probably look to set up for the daily higher lows for the possible daily trend change and second attack at the resistance. But as of now, it's looking good. So any pullbacks on AMD will be a beautiful opportunity to be writing some short puts down here, 137, 135 range. Not looking too bad. And on the weekly, guys, watch out. AMD is trying for it, right? They are desperately trying for the weekly trend change. The weekly trend change would need a break of 161.33 to the upside. It would give us a new weekly uptrend in motion. So that is the overarching pattern that we're looking for here, guys. It is the weekly trend change back to the bulls, an extremely important measure. We have not had a weekly uptrend ever since the later part of July when we lost it into big consolidation, right? So AMD, in my opinion, is looking very, very, very solid, just waiting for a little bit of a pullback now that we have a semblance of a daily uptrend pattern forming, and we see that the weekly is looking good for momentum. Any slight pullbacks on the daily could be a beautiful opportunity for an entry to then start attacking those levels. Now, moving on to Amazon. Amazon powering through here today, 2.77%, guys. We were talking about this one yesterday, right? Tight range of consolidation on the daily. On the daily, it might look a little bit confusing, but look on the weekly. The key was on the weekly here, guys. This was a weekly bull flag, right? Beautiful bounce by the bulls, reacting nicely from our support box right here, 172 down to 160. That was previous all-time highs from 2020 and 2021. We were looking for the bull flag to just essentially manifest into a new weekly trend change for the bulls. And that's exactly what happened today. Tremendous follow through from Amazon bulls. So now obviously Daily uptrend back in motion as soon as this move tops out. Just going to be looking for a daily higher low, anything above 171.50, daily higher low for possible further trend continuation. Next big area of resistance, guys, is this yellow line up here. Let me just extend it. As a matter of fact, that is going to be roughly 189, 190. But Amazon is looking primed, and congratulations if you took that hint yesterday and were able to make a little bit of money on this trade. Well, it was a very beautiful opportunity just based off that weekly time frame expansion. Now, moving into Google. Google also not looking too bad today, right? Google finally showing a little bit of a sign of life, but it's just one day, right? We're going to need a lot more momentum from Google in terms of the near-term future to say that the bulls have a chance of getting this daily uptrend back. So the bulls have a lot of work to do, right? Daily downtrend is clear as day right now. As soon as this bounce tops out, we will measure the size of the bounce, right? So take a look at the bounce. We now have the semblance of an hourly uptrend shift in motion. We are back above all of your short-term moving averages on the hourly, something we have not had, guys, since the high 160 levels at the end of the month of August. It's been a long time for Google, right? That we have not had a decent hourly uptrend above our moving averages. So we'll see if Google bulls can continue this rally momentum into tomorrow. And then we'll measure the size of the bounce in relation to 160.5. Need to at least see, guys, a 618 bounce. So for that, we need to come up at least to about 156, right? So come up to 156. Come up to 156, and then the bulls create enough space to be able to reset into a daily uptrend and possibly start attacking some of this weekly momentum as well, right? A lot of work to do. So first things first, need to get the daily uptrend back. And then only then can we say the weekly lows are set. And then we'll be watching once again for the size of the move in relation to the weekly and see if they can reset the weekly timeframes as well. So a lot of work to do, but they're reacting beautifully from the level that we've targeted, right? 153 down to about 144, prior all-time highs for Google, prior area of congestion back here as well, reacting very nicely from it. And also we had signaled daily oversold conditions on the RSI. Doesn't happen too often for Google. And when it does, we have to at least nibble and make some trades down here on one of the best companies in the world. So we'll see how this one continues to go. I still like this one for a little bit of a swing trade to the upside, or even writing short puts below our lows down here, below that 148 mark. Moving into Meta right now. Meta, solid day, 1.39% to the upside, but Meta is still in a little bit of a daily downtrend right now. So daily downtrend, clear as day, as we can see, right? Lower lows set today. So now it's completely up to the bulls, guys, to start reversing this move. We would need to get an engulfer in all the way up to about 524. Give me an engulfing move to 524 or beyond. We can talk about resetting a daily uptrend pattern and possibly attacking these all-time highs once again. Now, on the weekly, we can see what the bulls are trying to do even better, right? So we know that we had a weekly uptrend back here. Let's take it one step at a time, right? Weekly uptrend, and then we lost it. Flush from the higher lows, lost it. What did the bulls do thereafter? 100% engulfing move, and now they're trying to reset into a weekly higher low and go for the weekly trend change again. So we've been waiting for this weekly higher low. How do we know the weekly higher low is set, guys? Well, you need to erase this daily downtrend. You can only erase this daily downtrend if you engulf the most recent leg of selling as a whole, which would be in a completely engulfing move like this, or in the event we reset lower and reset the daily uptrend, something like that, then you know that your weekly higher lows are most likely set and we're on for a second leg of attack towards the all-time highs. So Meta is looking very, very decent right now, but is kind of in an in-between zone. Very tough for me to play this one when we do not have the daily uptrend just yet, and in the face of this big area of resistance above us, 515 down to 530. I was waiting for Meta to come down a little bit closer down here to our 490, 485, so I can make some swing trades from there, but it didn't quite get there. So the trades that I'll be looking for on Meta in the near-term future, I want to see an engulfing move, get above our big area of resistance, and then sit on it. Give me the breakout retest trade. I will take the retest for the eventual run. That is how I'm looking to play Meta stock in the near-term future. Moving into Microsoft right now. Microsoft, absolute gorgeous recovery, guys. And thankfully, we called this one in the Discord, but I also called it on the channel too. This was a beautiful, beautiful, beautiful area to be picking up Microsoft, guys. So hopefully all of you were able to pick up some shares as well, either for the long-term portfolio or a few swing trades, because it was a golden opportunity, right? So daily downtrend coming all the way down here into very large support, 402 down to 390, guys. such an easy trade to attempt on Microsoft. This area has been support for the entire year so far, and the fundamentals of the company have not changed. This is just short-term price action from the markets, right? So that being said, Microsoft trying to set up for the new weekly uptrend, and we're almost there, guys. That would be a break of this guy right here. You can barely see it. Let me zoom in for you real quick. You can barely see it, but look, we're almost there here, guys. 426.61. This line right there, that would be a new weekly uptrend for Microsoft. Microsoft has not had that weekly uptrend since we lost it at the early portion of July. So Microsoft looking very, very healthy right now, but these swing trades that we took down here are pretty much going to be taken profit on very, very shortly because we are approaching the overhead area of resistance, which is pretty much 425-ish all the way up to about 435. So this is going to be our take profit area number one on those swing trades. But as of now, guys, Microsoft looking very, very healthy. In the event we get rejected from here and come down a little bit, you guys should understand what the bulls are looking for right now. Going to be looking for a higher low on the daily, anything above 400, higher low for possible second attempt at smashing this resistance zone and continuing into a new weekly uptrend. So Microsoft is looking very, very good right now. Congratulations to everybody who was able to, bite the fear in the butt and buy the dips regardless on the last Friday and even on this Monday session as well. So moving into Netflix. Netflix also not looking too bad, 1.17%. Netflix still just consolidating sideways, right? You can argue that, yes, they are in a little bit of a daily downtrend challenge right now, but for all intents and purposes, when we zoom out, guys, this is a weekly bull flag, right? Same concept, big engulfing move, looking for the weekly higher low for possible weekly trend continuation for the bulls. The last area of support was pretty much down here, 656 down to about 630. We never even got there. So in the event the bulls really start challenging now to the upside, this 697, 700 range, we can probably confidently say the weekly higher lows are set. And we're looking for that weekly trend expansion beyond the all-time highs, which are sitting very close at about 700. Look at this monthly chart, guys. You guys see any red flags on the Netflix monthly chart? Probably not, right? Which is why I say this is a weekly bull flag. We have a bullish long-term bias, guys. Beautiful monthly uptrend. So usually when we get some relatively sideways consolidation like this at the top end of the range, usually those do tend to break bullish. Now, moving into NVIDIA. NVIDIA, guys, monster day, right? 8.15%, looking extremely good, but NVIDIA bulls still with a lot of work to do. Daily downtrend was clear as day, and now with this bounce, we do have a pretty good size bounce move right now, right? Talking about a 50% bounce. Now, the top end of this big resistance zone right there, 120 down to 115, this 120 range is going to be the 618 retracement. So in the event, we can come all the way up into the 120 range, and then in the event we get rejected from here, we have a ton of space right now, guys. Anything above 101 is going to be an attempt to set up for a daily trend change back to the bulls and put an end to this weekly bleeding and maybe even make an attempt for a weekly uptrend. That would be a long way away still, guys, 130, right? I've said it once, I'll say it again for NVIDIA, guys. In my opinion, because of the size of these pullbacks right here, maybe the best thing we can get, especially if September continues to be very, very volatile and we get some more recessionary headlines, some election uncertainty, maybe the best we can get on NVIDIA moving forward is simply a tightening range pattern, right? Similar to what they did last fall too. So we'll keep an eye on this one. The bulls still have a lot of work to do, but very healthy bounce. The best way for me to be playing these swings on NVIDIA, guys, is waiting for the down swings and then be writing short puts well below the market, just in the business of collecting premium while there is still no clear defined trend. So this is where I love collecting premium on stocks with high volatility. But as of now, the bulls are looking quite healthy with this bounce. We will see if they can change that into a defined daily uptrend conversion and possibly even a weekly uptrend conversion by a break of the highs. I have my doubts, but obviously it's NVIDIA. So the bulls have a lot of proving to do. Can they do it? Can they not do it? We will find out. Take it one day at a time, guys. Moving into Tesla right now. Tesla up about 0.87%. Not a bad day for Tesla at all. Trying to retest our highs right here. So Tesla essentially trying to maintain the daily uptrend. The daily uptrend break would be a break of 235 to the upside. Break 235 and you might have clear, smooth sailing all the way to the gap fill location, right? 240, 244. That would be most likely where the bulls encounter a little bit more resistance. Now, in terms of your weekly price action as well, weekly is not looking too bad. The bulls are trying to go for the weekly uptrend shift as well. That once again would be a break of that same 235 level. So we'll keep an eye on Tesla, guys, but Tesla has been very, 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 very volatile, right? So the price action is not the cleanest as a whole. In terms of the way that I'm playing Tesla, guys, well, I'm not really playing it right now. We are in an in-between location. This is pretty much perfectly the midpoint between the lower bound of support around 185 and all the way up here at around 265. Very tough for me to position when the risk when the risk reward is kind of equidistant, right, to our weekly levels. So not the best in terms of swing trade opportunities, but if you want to go for some bullish continuation, there are a few signals. We are above all of our short-term moving averages, and we are still above this downtrending channel line too, right? Reacting nicely from the lows of those in the past few days. So Tesla, there could be an opportunity for a little bit of long bias trading right there, but just keep an eye, guys. The risk reward is not the best right now. So at best, it would have to be limited to maybe day trades alone, right? But Tesla, not looking too bad. Myself personally, I would favor trying to play some short puts lower down here, guys, around the 195, 190 location. A bit too far for that now. So I'll take this one day at a time. In the event Tesla has a gigantic sell-off for, XYZ reason, I'll be looking to play this one at the lower levels. But for now, since it's kind of an in-between location, not quite trading it just yet. And now lastly, moving into Palantir. So Palantir coming alive in the tail end of the day here, 0.26% to the upside. Not looking too bad here, guys, right? So I'll remind you, where's the overhead resistance now? It is pretty much the prior all-time highs, 38 up to 39. But the valuation on Palantir right now is excessively rich, right? At $34 right now, the PEG ratio is closer to about a 4 PEG. That is way too high for me. Now, I'm not selling any shares on Palantir. I'm keeping all my shares, but I'm not buying or adding any more, right? I think it's a risky proposition buying into Palantir rally like this, right? If you kind of miss the boat, I would not be chasing this one right now because the risk reward is not the most favorable. The way I'd be looking to play this one is waiting for a little bit of a retest here, guys. We can exert some patience because we know that Palantir sometimes goes on these crazy rallies, then consolidates for a few weeks. So we always get these re-entry opportunities like this, right? So I wouldn't have too much FOMO on Palantir, even though I love the company and I know you guys do love it too, right? So keeping that in mind, daily bulls are in full control as soon as this move is topped out, looking for a daily higher low for possible further trend continuation. In the event we start retesting some of this gap location, right? 32, maybe down to about $31. That's where I'm going to be looking for some swing trade opportunities for maybe some short puts in the lower $29, $28 range all the way down here. But right now, the bulls are in absolute full control. Just keep an eye though, guys. Daily RSI, a little bit overbought right now. In the short-term RSI, not so much because we've had some consolidation over the last few days, but still, the weekly though is looking gorgeous, guys. Beautiful, beautiful, beautiful weekly uptrend. So in the event we lose this and settle into a daily downtrend consolidation for a few weeks, just understand what we're looking for. Looking for a weekly higher low for possible further trend continuation. Same thing as we got here. Big move up, consolidation, move higher, and maybe some more consolidation, and that's when we might attack this 38.39. So those are the setups that I'm going to be favoring more on Palantir. That's pretty much everything for our stock analysis here, guys. Now let's jump into my portfolio. And let's jump into the portfolio right away, guys. So a little bit of a preface, right, to the portfolio. Now, in terms of what I look to do on the portfolio, guys, a lot of this portfolio is really for educational purposes in trying to teach you guys how to utilize different option strategies in a passive way to generate more income and have a lot of capital efficiency, right? How can you use your dollars more wisely to get the best ROI percentage per day, right? It's all about ROI percentage, guys. Do not focus on the dollar amount. That is the wrong way to trade, right? ROI percentage is going to be the same across all account sizes, which is going to be that's going to be the one thing that allows you to scale, right? 10% win on $1,000 is $100, but a 10% win on 100 grand is 10 grand, but it's still 10%, right? So do not trade for the dollar gains alone. Always focus on ROI per day, which is why I started this trading account to begin with. I wanted to show you guys that selling options premiums in a very conservative manner and also utilizing more conservative call option mechanisms such as call debit spreads can be a very easy and passive way, guys, to make some decent money from these markets without having to be in front of your screen for 6, 7, 8 hours per day trading futures or trading long calls and long puts, right? Trust me, guys, if I was trying to maximize profits for views, I would not be using the wheel strategy. I wouldn't be selling options. I wouldn't be writing put credit spreads. I wouldn't be doing call debit spreads, right? I would be doing intraday swing trades as I started off my accounts with a very long time ago, right? If we're going for profit maximization, it's all about either futures or call options early in the morning, 5, 10, 15-minute trades, and then you're out, you're done for the day, right? But that's not what I'm trying to teach on the channel. I'm trying to provide an environment for if you only have maybe 15, 30 minutes, 45 minutes per day, you have a full-time job, maybe you run a business, right? Or maybe you have a bunch of other things to do that you don't want to be in front of your charts looking for 5-minute setups every single day. Well, these are the strategies that's going to work the best for you, right? So I'm trying to find a good middle ground on the channel between, passively investing with options and boosting your ROI. And also presenting small account strategies too, in terms of large gains and trying to ramp up the profits for an account, guys. Trust me, we can do that too. If you guys want me to do a $1,000, a $10,000 account challenge, I can do that as well, but it's going to be very tough to follow because a lot of the trades will be in hindsight, right? I'll just be showing you guys, well, I was in NVIDIA calls from 9:45 to 9:51 in the morning, and that was done. But like, what can you guys learn from that other than me showing you on the chart, right? Not very much, right? Because it's a very quick in and out trade. And if you have a full-time job, well, maybe you cannot replicate those same setups, right? So that's what I'm trying to do with this options portfolio right here. Now, all of that being said, let's jump into a few of these positions, and you'll see there's a ton of positions in the account, guys. But trust me, none of these positions require daily management. They are all options with a lot of time on them, right? You can only look at these positions once or twice per day, and you don't have to change them much because there's so much time on these contracts. These are all weekly time frame swing trades. So usually they'll take, days or possibly 2-3 weeks to actually play out. So even though you see a lot of positions, I'm showing you guys all these positions to give you guys the most amount of ideas as possible, the most amount of setups, so you guys can get an idea of why I choose the options and why I choose the trades that I do. That being said, a few of the ones that are not here today, well, let's just take a look at them real quick. So a few of the ones that are not here today, guys, we closed one of the Microsoft put credit spreads that we had. So back in the day, well, not back in the day, I mean last Friday, right? Last Friday on Microsoft, I showed a very easy strategy to write some options on Microsoft. So Microsoft was all the way down here, and I went with an option with a ton of time on it. We went with the October 25 $3.95 versus $3.90 put credit spreads. We got about $1.65 in credit for those. And now, just 3 short days of trading later, we were able to close those options for a 50% gain. You can see the closing transaction right here. I mean, you could do the math, but it's about 85 cents. So we got $1.65 in credit, closed it for 85 cents. That's a net profit of almost 50% in 3 days worth of trading. Extremely passive trade with a ton of time on it, guys. Anybody can replicate that type of trade, and it's on Microsoft. Extremely solid company, right? Now, I did also, because I'm trying to do a little bit more of these in the Discord, of course, for those of you who want to maximize profits on a day-to-day basis, we went with some straight call options as well here today. So we went with some Berkshire BRK.B calls. I did not get the best pricing on these guys. I had priced them out before lunch, went away from lunch, not expecting the market to move too much, and then it actually rallied in my face. So even though we got a late entry on these guys on Berkshire, $2.20 for these calls. These were for next Friday. We were actually profit 11% on them in just about an hour and a half of trading, selling them for about $2.45. The logic on that trade was as follows, right? So Berkshire reacting beautifully from this level of support down here. We were looking for the short-term time frame shift. Short-term time frame shift started happening right here. And this is literally when I walked away for lunch. And when I came back, it was all the way up here. So we took them a little bit late, but the trade idea was just the same. Looking for a rally off of Berkshire, looking to come out of hourly oversold conditions as part of a larger daily location. Very easy daily swing trade for call options, guys. So trust me, if you guys want to see more call options intraday, I can definitely show you them, but they're very tough to copy unless you're there with me at that current time, right? So moving on further, in terms of another one that I closed today, we closed some more CPs. So CPs, if you can remember, guys, I still have one contract, so you can see my cost, right? These CPs were put on roughly about a month ago. We went with the 85 versus the 87.5 bull call debit spreads for 75 cents a pop. We went with those trades on CP when the market was all the way down here, off the flush, and we were targeting a recapture of the top end of this range of resistance right there, being a more defensive play, being a play that is favored in a environment of a recessionary headlines and things like that, right? It's a more value and defensive name. Now, in terms of the last few weeks of trading, I've now closed. We had 3 contracts. I've now closed 2. One was closed last week at $1.15, and one more was closed today at $1.35. As you can see, we are pretty much up over 50% profits on those. And the next contract will come out of this account at a 2x at $1.50 a pop. So this was a very easy trade with a ton of time on it. These were for December, guys, right? Very easy to replicate, call debit spread position right there. Those are pretty much the only other ones that I closed today. All the new ones are opening trades as a whole, right? So let's go through them in terms of the ones that we open. A lot of these other positions we've gone through a number of times on the channel. This is a wheel trade. We got smashed by Ally Financial. Nothing we can do. We wrote this with the expectation of being out of this before earnings in October. They gave guidance 1 month prior to earnings. Nothing we can do, guys. Got hit 17% drawdown. You guys have seen my wheel trades. Other than earnings, I don't think I've ever put on a wheel trade on the channel that's gone down 17% in one single day, especially on a more defensive company. Usually it doesn't happen, but those are the things that we have to go through for the wheel. So we have an average down attempt on it. I had some covered calls. Our average cost now on this one is about $38.60-ish, right? So we're still down a tremendous amount, right? We're down about $6 per share, but it's not that bad. We'll maintain this position. ATD, that is all covered up as well. Got assigned at 80. With all the covered call premium received, our average cost is now down to about $78. So we have the $79 calls for September 27th. We'll see how those go. So far, it's not moving too bad. Still the buy dues. We opened some BITX. This is 2 times leverage on Bitcoin. We opened the BITX $22 puts for about 12 cents. Just looking to farm a little bit of premium before the weekend, right? So BITX, the reason I went with the 22s is literally a little bit below here, the level we challenged here today. Roughly speaking, guys, on Bitcoin's chart, that would be a revisit of the lower $54,000 range all the way down here. I do not think after today's tremendous recovery, I don't think we're going to revisit 54K by Friday. I could be wrong, but this is just me trying to farm premium with very, very small amounts of capital, right? Only $2,200 of exposure, and this is literally 0.5% for only 2 days worth of trading. John Deere performing fairly well. We'll probably close this debit spread shortly, but looking for a push into the 400 range. We still have the Disneys. Now we did open some GLD, bull call debit spreads. This is a hedge play, guys. In the event that the markets continue being a little bit weak, institutions go for the hedge trade in gold. Gold obviously setting up for a very beautiful bull flag right here. If we get some trend expansion on this gold position right here into perhaps the let's pull up gold so it makes a little bit more sense. If we can pull up here on gold, guys, beyond 2540 to 2550, which is not that much higher, we should be able to profit a decent amount right here on this GLD trade. I presented it yesterday as an idea on the channel. So 5 contracts debit spreads for January, 235 versus 240s for about $2.11. If these can get up to about 250, I'll consider starting to close a little bit of them. Just looking for some quick ROI. Google, as you can see, guys, we're pretty much all in on Google right now. We have 100 shares here at 170 we got assigned after so much covered call premium, guys. The average cost on these is now down to about roughly about $158.50 right now. So not looking too bad on these 100 shares, even though we are still down. We got the covered calls on those for next Friday. We're already decently profitable on those, but I'll leave them. Only thing you got to understand, my average cost is $158.50. The second batch of Google shares that we got assigned at $157.50 on GOOG, those two are unfortunately down right now. So those, we are still covered up on those two. We wrote the 155 calls for next Friday as well, $2.32 in premium. So our average cost now on this GOOG position is not that high anymore, guys, right? At this current time, it's probably roughly in the 154 range, so not so bad right now, even if we were to get called away at that 155. And then, of course, we have the leap call that I think on my microphone was unfortunately muted on the Monday session, so apologies for that. Leap call on Google. I'm all in on Google at this point, $2,874. It is now up nicely. A few of our members in the Discord actually took profit on a few similar positions on this Google Leap variant so far, but very, very easy trade, right? Google oversold conditions on the daily time frame into our big support level, 23% off the all-time highs. So I'm going for a leap. If it comes down into the lower 140s, even high 130s, I'll throw another contract at it. Once again, the expiry for this one is the September 19th, 2025s. Now, moving on further, Intuit performing very, very nicely. The shares are now nicely up in profit. So I gave this call on the channel roughly about 3 weeks ago. Hopefully, a lot of you are able to get some dips on that. And we also have the Intuit bull call debit spread right here, which is performing well too. If Intuit pulls up into the top end of the range right here, 660s, we'll be looking to close a little bit of those profits on that Intuit position. Now, see, like all these trades, guys, some of these have been set in forth for weeks, right? And we're still in these trades, which is why I say you don't need to watch them every single day. Microsoft, our take profit is coming up shortly as well. 11 shares still there. I think it's now logged me out. So let me just try to get through these quickly. NVIDIA, we got the 103 calls, and we also got the shares. So we got to sign these shares. Unfortunately, you can't see the data anymore. They're roughly about a 105. I'm surprised I didn't get the login prompt. Do I still have it here? Do I have the login prompt anywhere? Maybe it can just log me back in right there. Nah, I screwed it up for us, guys. My bad on that one. Let me try to just log in real quick on the other screen so you guys don't see my my login details and my password, right? Let me just try to pull it up on the other screen real quick. Sorry about that, guys. All right, let me try to log in, because if I don't do it right now, I have to put this video into an editing software to put the two clips together, and it adds like a 25-30 minute processing time to the video, and that's the last thing I want to do, right? I want to put this video out as quickly as possible, so bear with me for 2 quick seconds right now as I kind of deal with this on the second screen. So let's go into it right now. Let's see if we can log in real quick. Is it going to give me my holdings in a proper fashion? Yeah, so we should be good now. All right, perfect. So we're back. All right, perfect. We're back. Now, all right, so moving on into the NVIDIA explanation. So NVIDIA, I mean, we were assigned at 105. We wrote defense in the money, 103 calls. The difference between this position right now is the maximum profit we can get on this trade. It's about 350 bucks. I could literally close this trade right now. The shares are at a profit. The covered calls are at a loss. The loss won't get wider and the gain won't get wider either. We're kind of capped right here. 350 bucks, got assigned these last Friday. This is going to be over a 3% return in 1 single week of trading. Looking very good there. We also opened a new trade on NVO. NVO bull call debit spreads, 2 contracts, $1.94 a pop, 140 versus the 145s. And I'll explain that one very, very briefly as well. So the NVOs right here, guys. NVOs, we're just looking, guys. This monthly time frame is looking excessively good for some trend continuation to the upside. The weekly is not looking bad too, trying to get the weekly uptrend back and just looking for some daily momentum follow through on this play. So that's why I put so much time on these NVOs right here, guys. As you can see real quick, right? A lot of time on these. These are for November. So looking for a little bit of a momentum play there. Still have the OXY positions and the longer duration calls on those. We'll see what happens with those. Still the pin duo duos, the Qualis bull call debit spreads as well. Those are not doing too bad. We still have the assigned 200 shares of SoFi with the covered calls, 750s for next Friday. Not looking too bad there. SQQQs still a hedge. We're now down on the hedge, but we were up on it for a long time, up until today pretty much. Just a pure hedge, guys. That's why there's so much time for the month of December. And now TLT January $94 calls, 3 of them doing fairly nicely on those hedges as well. We also still have some Tesla bear put spreads not doing too well. These were also a hedge play in the event the market continued coming down. And some of our UPS longs that we have here, bull call debit spreads for some potential UPS expansion into October and November if we get that infamous UPS breakout as that I've been talking about on the channel, right? Very, very tight range of accumulation here, guys. Tight range, looking for a breakout into the 135 range. Same trade as Airbnb. Tight range, looking for a breakup into the 125, which is why I've been using some pretty much bull call debit spreads on both, right? The Airbnbs up here, which I added to today, and also the UPSs down here. So that's pretty much everything, guys, for our portfolio rundown. Hopefully you appreciated that. Now, that's pretty much everything we had for the video, guys. So if you appreciated today's video, consider dropping a like. Would really appreciate it for the growth of the channel, of course. Second, if you are not subscribed to the channel, please consider doing so. We are so close to 3,000 subscribers, guys. So I would love it if you take the time to click that subscribe button to get us over and above that milestone for me. And lastly, guys, if you have any questions at all, now's the time. Please feel free to leave them down below in the channel, in the comment section, and I'll get back to you within the next 24 hours. And as per usual, guys, if you want to have a more personalized experience with me, get access to our private morning live streams for about an hour every single Monday to Friday, all of my live trade alerts, ask me questions and my opinions on options plays and everything like that in the Discord all day, every day. Well, consider clicking the link to our Discord down below and join us in our private group. We have a lot of fun in there every day, and the reviews so far have been quite good. And we also do make some decent profits in there, of course, all right? So that is pretty much everything for today. Hopefully to see you guys back after tomorrow's session. Take care and peace.